Hey, what's up, guys? It's Jared from Click Capital, and welcome to today's show where we'll be performing technical analysis on all the major markets and giving you our forecast and opinion on where prices could go next. Okay, so the market had another risk on day. It is edging closer up to this top trend line that everyone is watching and talking about. And we did have bank earnings come out today that had a bit of impact, but we'll get to that in a minute. Dow was up as well. Nasdaq outperforming out of the four major indices. Small caps had another good day. International stocks are really strong. We can see here on the medium term they're bullish and breaking out. VIX just getting the life sucked out of it again and definitely down in this lower support zone. If we break out in the markets, the trend line, this VIX is going lower and wouldn't be surprised to see it at 15 in the next couple of weeks. VIX 9-day down even harder. So right up the front, volatility is just coiling big time. Cyclicals versus defensive, slightly up. Nasdaq versus S&P up. Small caps, growth versus value up. 10-year, let's just take that log chart off. The yield curve of the 10-year versus the 2-year just sitting there. Clean energy up a little bit. Gold really strong, breaking out. This is one of the most, probably gold is the strongest sector in the short term right now. Materials flat, energy flat, communications flat, financials. So we'll talk about that a bit. So we had three of the big banks come out today with Bank of America, and we'll hide the trend candle so we can focus in on today's action. So if we look at Bank of America, Wells, Citi, all kind of similar price action. We started the morning lower, gap down, sold off hard, probably would have sucked in a lot of bears, and then whoop, right back up, reversal, finishing near the highs of the day on big volume. So this is really bullish price action. This is huge bullish engulfing candle. And normally what happens with these things is they kind of just fizzle out and just go sideways, or it can lead to big up moves like this last bullish engulfing we had back here in October. So it'll be interesting to see if the banks go for a run here. And they have kicked off earnings seasons, reporting on Q4, with more banks to come next week, and then more of the market the following week, especially in early February. So, and the banks, their commentary from the CEOs is they all kind of saying the same thing. They're saying everything's okay, the economy's strong. They're only predicting a mild recession. They've still been hiring staff. So for now, everything's okay. There's no bleak outlook just yet. So I would suspect that would at least provide some support, especially with this bullish price action. So I don't think we'll be selling off in the banks anytime soon, but whether we come out and test new highs and whether we break this overhead resistance zone on the financials is yet to be seen, and we are still in technically a downtrend on the medium-term 3-day chart and long-term weekly chart as well. So sitting in a big resistance zone here, the financials with a report. This could be the thing that sends them higher, today's price action. Otherwise, I suspect it will just kind of hover and sit around here. So I do expect there to be bids in the sector. Moving on to an industrials. Industrials was down a little bit today. Tech only up a little bit. Discretionary had a good day. Retail flat. Semis up a little bit. And so on. Defensives kind of mixed. So utilities were off. Staples were off. Health's up. Bots, which we covered, we did a special video on yesterday. Check it out after this one if you haven't already. We do a deep dive of fundamental and technical analysis and why we think bots is a good long-term investment here, and as AI could be the next leading sector of the next bull market. So be sure to check that one out. Over the 10-year, as we expected, it has held and it has bounced a little bit today from this big support zone here. And that's kind of the big one. So the market's expecting the Fed to increase rates by 0.25% on the 1st of February. And that should help hold the 10-year. If we go through this, that's going to be really bullish for equities. If it holds and bounces, that's going to be bearish for equities. So kind of this 350 is a big kind of level we're looking at. And with rates up, bonds sold off, treasuries down, corporates down, high yield flat. Commodities had a reasonably strong day, as did Dr. Copper, breaking out again on above average volume. He is feeling risky, so that's a good sign for upcoming economic conditions. Gold, strong, look at that, ripping up on a big Marubozu candle, finishing at its highs. A lot of momentum. This is the strongest sector right now in the market. Silver was up, oil was up, good. Natty gas fell, volatile as always, bit on big volume, and kind of on a stalling doji there. Momentum is stalling, so we're still thinking this is a short-term bottom, and we're playing that as such. Agriculture up a little bit, uranium up a little bit, and bullish on the short term. Dollar flat on a small doji here. We're approaching the 101 psychological level. We think that is going to hold. And it is still technically in a bullish uptrend on the medium-term chart. Euro kind of flat, yen down a little bit on dollar weakness. Bitcoin has just gone bullish on the short-term chart on the daily here. It's still bearish in the medium term and long term. Just add a log chart because it's gone down so much, it's kind of hard to see. However, this 20,000 looks like a pretty big, technical level, right around 20,000 here. So I wouldn't be surprised in weekend trading. You always see a bit of, loose trading with low liquidity and that. So I wouldn't be surprised if this thing runs up to 20,000 some point this weekend, over the long weekend. And whether that bounces off and does a retracement or shoots through is yet to be seen. BlackRock, a barometer of inflows into the stock market, since a lot of their profits are dependent on assets under management. It was flat, and we can see it is in an uptrend on a medium term and outperforming the S&P. If we do a spread chart of BlackRock versus an S&P, you can see that is bullish. So that's a bullish sign for the stock market and inflows at least. Mega cap tech had a reasonably good day. Apple up 1%, Microsoft kind of flat, Amazon had a good bounce, Google up, Meta flat. Nvidia was up pretty good, and Baba broke out again to new highs, really strong momentum. Tesla was flat. I think there was an analyst that cut their price target because, Tesla cut their prices on their Model 3 and Y. And so that kind of looks weak and kind of desperate. It goes against their policy of, not really chasing the customer with discounts and marketing and promotions and that. So that's kind of bearish kind of news flow there, but technically it still looks like it's putting in a bottom on all this volume, just stalling out momentum. So I think it is holding this 100 level, and as soon as we get some sort of decent good news or the market does break out with a lot of risk on flavor, I think this will unwind some shorts and everyone will start chasing it again, at least in the short term. And the meme stocks, after having a great day yesterday, and sucking in a lot of buys by the looks of it. Carvana off 12% today, Bed Bath & Beyond down 30%. So these meme stocks kind of like sucking everyone. They're kind of like a great fading indicator. for the market in general as well. Generally, when these things pop, it's kind of so does the market. So it's kind of interesting to watch on those things. Okay, so the final diagnosis on the S&P is I think we are going to come up and test this trend line next week. We've got a long weekend, so the market's closed on Monday for Martin Luther King Jr. Day, so shortened trading week next week. But I think we will, so many people look at this trend line, it's going to test it and it's probably going to go above it, then everyone's going to be calling it the new bull market. And then I think it could be a bit of a bull trap. So I think whether it gets through this resistance zone, I don't know. I'm hesitant. It's just the market's trading so thick. You can see the range strength at almost 13 here, and it's just so much overhead things, and the recession backdrop and all that. But it's kind of mixed out there because volatility is really low. Volatility is saying it's going to break through. Everything's good. Copper's saying that as well. And but just going through looking at the sectors themselves, apart from energy, all the other sectors are kind of really flat or a lot of overhang or downtrends. So it's the breadth is just not there. We're still technically in a downtrend on most charts. So for now, I'm still positioned net short, but I would not be surprised to see us trading up to 410 next week and breaking this trend line, and then maybe trapping some easy bulls. Other than that, that pretty much covers it for today. Thanks for watching if you made it this far, and I hope you enjoy your long weekend, and hope to see you back again on Tuesday after market close to discuss the most recent price action. Okay, ciao.